or?
Well, I like all the metals, copper, nickel, also as how they play into the electric, stuff, electric cars and all that, and the data centers that are being built. I mean, there's going to be a lot of demand for the raw materials. I think energy is cheap, natural gas, oil is cheap, agricultural commodities. I'm bullish pretty much on the whole complex of commodities. They're all going to be bid higher with all this inflation. And especially, as the dollar really tanks, if emerging markets are a main beneficiary of a weaker dollar, then they're going to consume a lot more commodities because, they're going to start consuming more of their own production. Instead of exporting stuff to America, they're going to build stuff and keep it. But I think there's going to be a lot more energy because they're going to produce a lot of things that are more energy and resource intensive when they're no longer just exporting trinkets to America. They're producing goods for their own consumers. So, we could see a real boom in commodities. And of course, this means that commodities are going to be a lot more expensive for Americans too. Just a lot of Americans won't be able to afford to buy them. They'll be priced out of the market by the weak dollar.
Yeah.
Welcome back to the channel. Today, we're diving deep into a bombshell interview with legendary economist Peter Schiff. And folks, what he's predicting will absolutely shock you. We're talking about a potential economic collapse that could make 2008 look like a minor correction. But before we jump in, make sure you hit that subscribe button and ring the notification bell, because the information we are about to share could literally save you from what's coming. Let's dive in. While everyone's obsessing over AI, stocks, and Bitcoin, there's one sector that's absolutely crushing everything else and getting zero media attention: gold mining stocks. Get this, the GDX and GDXJ gold mining ETFs are up 77% year-to-date. That's not a typo. 77%. Meanwhile, the S&P 500 is up about 10%, but the dollar is down about 10%, so international investors are seeing basically zero returns on U.S. stocks. But here's where it gets even more interesting. Schiff's International Dividend Fund is up almost 40% this year. That's 4 times the S&P 500's real returns when you account for dollar weakness. And he's predicting this is just the beginning. He thinks we could see gold mining stocks double, 100% gains, in single calendar year. And here's the kicker about central banks: they're rotating out of U.S. dollars and treasuries into gold. This has been the primary driver of the gold bull market, and it's accelerating. Schiff reveals that gold has actually outperformed the S&P 500 over the past 25 years. His prediction? $10,000 gold is not that far off, only about a triple from current levels, achievable in 3 to 5 years. On silver, he's equally bullish. With the gold-to-silver ratio still historically high, silver represents exceptional value for educated investors. Now we will show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you don't miss out our daily recaps. Thank you.
I think the fiscal policy is horrible. The big, beautiful bill exacerbated an already large deficit problem. They took all the Biden spending that they campaigned against, the Republicans, and they kept it all, and then they added to it. So we've got bigger deficits. The tariffs are a net negative. Yes, the government needs revenue, but raising them this way is going to help make American businesses less competitive than they are now. And, of course, it's going to increase the burden on the poor and the middle class, who are already struggling as inflation erodes away the value of their wages and whatever they saved. And I think a lot of other things that Trump is doing, that he's misdirecting resources towards crypto and those type of businesses to the expense of other businesses that we actually need more than this crypto nonsense. He's taking a heavy-handed approach to trying to micromanage companies, getting the government to make deals with private companies or have taxes on their exports, which is, totally unconstitutional. But there's a lot of stuff that's being done that is undermining capitalism. I mean, just like I said, you're seeing a movement of investor money being reallocated, right, out of the U.S. abroad, not only to, get away from a weak dollar or capture the appreciation of rising foreign currencies, but U.S. market is expensive. Our stocks are because of this huge, massive bull market we've had, which is really a bubble. Stocks are very expensive in America. They're not expensive in a lot of other markets. In fact, in some markets, they're cheap. So that's a big deal. But the other big rotation is the one that central banks are making out of U.S. dollars and out of U.S. treasuries into gold. And that has been the primary driver of the gold bull market. And gold has outperformed the S&P so far in the 21st century. 25 years, you're better off January 1st, 2021, if you just bought some gold coins from Schiff Gold and put them in your sock drawer and just left them there for 25 years, you've beaten the S&P 500, even with the dividends on the S&P 500. So that shows you what's really going on. And this is going to accelerate. And not only is it going to accelerate among central banks, but institutional investors and retail investors are going to finally start to participate. So, a $10,000 gold price is not that far off. It's only about a triple from here. But I think it could easily be done over the next, maybe 3 to 5 years.
But then here's where things get really interesting. After Jerome Powell's Jackson Hole comments hinting at rate cuts, markets rallied across the board. Gold, stocks, everything went up. Most people see this as great news, right? Wrong. According to Schiff, this is exactly the opposite of what we need right now. Here's his take. The correct monetary policy is actually to hike rates, not cut them. He argues that at 4.5%, rates are still historically low, especially when you factor in real inflation, which he believes is much higher than official numbers suggest. And here's the kicker. Schiff predicts the next inflation peak will exceed the 9.1% we saw in 2021. We could be looking at double digits. But here's why the Fed can't raise rates even though they should the debt. The country has so much debt that appropriate interest rates would trigger a financial crisis immediately. So instead, they're choosing the slow burn of inflation over the quick shock of higher rates. Think about that for a second. We're essentially trapped in a corner where both options are terrible. Now for the part that'll keep you up at night. When asked how bad the coming bust could be, Schiff didn't mince words. Horrific. Much worse than 2008. We're talking about massive debt bubble popping, widespread defaults and bankruptcies, stock market crash, bond market crash, real estate crash. And the political reality is that no politician wants to deal with the pain required to fix these problems because it might cost them re-election. So they'll keep kicking the can down the road with more stimulus and money printing. The Fed will be back in QE mode by next year, according to Peter Schiff. Let's get back to the video.
And they also, need to hedge against Bitcoin if they have some of that. That's the stupidity too, because a lot of people in America, instead of buying gold the way they're buying it in India or China, they've been buying fool's gold, aka Bitcoin. And that's been a problem because when the Bitcoin bubble pops, a lot of these people who thought they were buying something like gold, they're going to find out that they weren't. So that's unfortunate because Americans don't own enough gold, either because they own Bitcoin or they own nothing. But owning Bitcoin is basically like owning nothing because that's all you got when you own Bitcoin is nothing.
Yeah. So you know you're going to get some hate mail from the Bitcoin crowd, but you're used to it. So
yeah, that's how it is. That's how people were in the .com bubble when you said something bad about their whatever their favorite stock that they happen to own that ultimately went bankrupt was. But yeah, and look, the Bitcoin guys want to make fun of me because, Bitcoin is 117,000 or whatever. Yeah, people have made a lot of money if they bought it a long time ago. But I've made more money in my gold stocks this year than people have made in Bitcoin. In fact, I've made more money in physical gold this year than people have made in Bitcoin. So the big Bitcoin money was made years ago. The smart money has been cashing out for the last several years. They've been selling into this Trump-inspired rally. It's the suckers, the dumb money that's been, buying into Bitcoin. And of course, you got MicroStrategy, right? Just, and other companies that have followed in his crazy footsteps, all these Bitcoin treasury companies that are buying up all this Bitcoin. The smart money is selling their Bitcoin. That's why Bitcoin isn't really, going up much. It went had a big spike, got above 100,000. One day it peaked its head up at like 123, 124, but then the next thing you know, we're back down to 112,000. We got a spike today because of Powell, but we'll see how long it lasts. But the real money is getting out of Bitcoin, if it was ever in Bitcoin, and it's moving into gold, and it's moving into gold stocks.
So,
Well, I like all the metals, copper, nickel, also as how they play into the electric, stuff, electric cars and all that, and the data centers that are being built. I mean, there's going to be a lot of demand for the raw materials. I think energy is cheap, natural gas, oil is cheap, agricultural commodities. I mean, I'm bullish pretty much on the whole complex of commodities. They're all going to be bid higher with all this inflation. And especially, as the dollar really tanks, if emerging markets are a main beneficiary of a weaker dollar, then they're going to consume a lot more commodities because, they're going to start consuming more of their own production. Instead of exporting stuff to America, they're going to build stuff and keep it. But I think there's going to be a lot more energy because they're going to produce a lot of things that are more energy and resource intensive when they're no longer just exporting trinkets to America. They're producing goods for their own consumers. So, we could see a real boom in commodities. And of course, this means that commodities are going to be a lot more expensive for Americans too. Just a lot of Americans won't be able to afford to buy them. They'll be priced out of the market by the weak dollar.
yeah, and more.
Well, I like all the metals, copper, nickel, also as how they play into the electric, but if we can break through it, I mean, we're not quite at a 52-week high today. We didn't quite make the highs, but we'll see what happens next week. I mean, I know that these metals are basing, but silver is very cheap. And so I've been a real promoter recently, last, 6 months in particular, even before when it was 100 to 1, when you could get 100 ounces of silver for 1 ounce of gold. And, it's not quite that cheap anymore, but it's still historically cheap. So I really like silver. You could buy silver at shiftgold.com. I mean, we don't have silver in the name, but, we sell a lot of silver at Shift Gold. So people should go to my website and buy the bullion. You don't want to buy anything fancy. You don't need any collectible coins, rare coins. That's all a bunch of BS to get you to overpay. We got the best deal. We got the lowest prices on silver bullion, whether it's bars, rounds, coins. You can get them at Shift Gold. And, of course, you get a great deal on gold there as well. And people should look into my fund, my gold fund, the Euro Pacific Gold Fund. But if we can break through it, I mean, we're not quite at a 52-week high today. We didn't quite make the highs. But we'll see what happens next week. I mean, I know that these metals are basing, but silver is very cheap. And so I've been a real promoter recently, last 6 months in particular, even before when it was 100 to 1, when you could get 100 ounces of
We're trapped in a debt spiral where the Fed can't raise rates without causing immediate crisis, but cutting rates fuels dangerous inflation. Meanwhile, fiscal policy is making everything worse with bigger deficits and market-distorting interventions. The implications of this is that U.S. stocks are expensive and vulnerable. Peter Schiff predicts that gold and silver are entering a major bull market, and commodities broadly should benefit from dollar weakness. The bottom line? Whether you agree with Schiff or not, his track record speaks for itself. He called the 2008 crisis. He's been right about gold's bull market, and his international funds are crushing returns this year. At minimum, his warnings deserve serious consideration as you plan your investment strategy. What do you think? Are we headed for the crisis Schiff predicts? Let us know in the comments below. We read everyone. Thank you, and see you in the next video.